All right, guys, we're going to go ahead and get started here on, this is going to be just your basic introduction to trading futures here. So if you have any questions along the way, you can either put them in the Discord. If you're in the Discord, you can put them in there. You can put them in the YouTube chat, or sometimes they pop up on my Streamlabs, which is what I'm using to stream here. If that happens, then you can comment there. I'll be watching. I'll try to answer your questions as I'm going. There is just a slight delay from when you type something to when I actually see it. So just keep that in mind if you are commenting here. So we're going to go ahead and get started here on an introduction to trading futures. So the first question is, what are futures? So essentially, futures are much like options in the aspect that they are a derivative. So futures, in short, is a contract stating that investors must buy or sell a given asset at a predetermined price and time. Unlike stocks, though, those contracts expire every quarter. So if you compare options to futures, to make one understand it more easily, when you buy to open a call on options, that's the same thing as taking a long position on futures. And when you buy to open a put, it's the same thing as taking a short position. Now, unlike options where you could sell an option and buy to open an option, you can long or short on futures here. So much like options, if you take a long, you are expecting price to rise. And if you take a short, you are expecting price to fall. So essentially, there's a bunch of different types of futures. What we do as day traders is not necessarily what futures was intended to be used as. So, in the Discord, there's actually one of the farmers, and he was talking about it, how he will use the corn and grain futures to buy his corn that he's going to get and things like that. So that's kind of, a lot of people do use it, but you can obviously, you can day trade pretty much anything that has liquidity. So there's that. So, all right. So we're going to go through all of these here, the pros and cons of futures here. So this first one we're going to talk about here is the pros and benefits of using futures. So one big benefit of futures is they are extremely liquid. So the constant movement of futures allows for investors to easily get in and out of a position. So for one instance here, I would say that, on, let's say, out of the money options, you might have very, very low amount of people wanting to buy that contract from you, because on options there has to be the other side of the buyer and the seller. You might not have somebody, if you want to sell your option for $1 or whatever, and it's at 0.9 right now, you might not have that buyer there. Versus at futures, it's just that constant price is right there, whether it's there or not. Another big advantage to futures is the market hours. So on futures, it is open 24/6. So, opens on Sunday night and then runs through Friday after market closes. And then there's just the purity of price action and time decay are two huge benefits of using futures. So compared to options, which have IV and the Greeks, that hurts a position that doesn't either immediately go your way, or even worse, doesn't go your way enough, on futures it's a far more fair price. So let's take an example. So if you're trading a call end of day like today, on a day that's super flat and super choppy, if you buy a 0 DTE call and you're looking for, let's say, 10 cents of price movement in your favor, it might move 10 cents, but if it doesn't move that 10 cents fast enough for you, you're not going to outweigh time decay, and you're going to end up losing on that price. So that's a big disadvantage to options. But with futures, if you're looking for a 3 to 4 point move up, whether it takes 10 minutes or 10 hours, assuming you can hold that long, with margin and stuff, it doesn't matter. If you get that 4 points, you got that 4 points. It is pure price action. That's one of the things I love, about it is you can play, and we'll talk about that a little bit more later, but you can play right off of key levels. You can play key breakouts. You can set, stop losses and take profits at critical levels, and exactly, no matter what, it's going to be there. Versus on options, you have to factor in decay, IV, crush, all those sort of things, and you might not, even if you're at that level, you might not actually get there. So that's a big advantage of using futures for sure. And now I'm going to talk about leverage as both an advantage and a disadvantage. And I'll explain why. So first, we're going to talk about it as an advantage. So let's take a small account here of, say, $2,000. So let's say your total trading account is $2,000. On a broker such as Tradovate, and again, I'm not affiliated with Tradovate. I get nothing from Tradovate. It's just what I'm familiar with. Just like Thinkorswim, I get nothing from Thinkorswim. I just know a lot about Thinkorswim, and that's just what I use. So I'm going to talk about Tradovate almost this whole YouTube here, but I'm not affiliated with them. I'm just using them because I'm familiar with them and their margin and all that stuff. So again, let's take a $2,000 account here. On a broker such as Tradovate, you can trade one MES, which is a micro, for as little as $50 in collateral. And that's intraday, during inter-market hours. So, and you can trade one ES for as little as $500 in collateral. So, unlike options, if you run out, so let's say you have a $2,000 account, and let's say your plan's to take 4 $500 trades. Once you take your 4 trades, you're done for the day, because you have to have in your options account, you have to have over 25K in order to reach that margin goal. Now, with futures, there is no 25K margin requirement. So, if you have, let's say, like I said, you can have a $2,000 account, and again, that's super tight for trading, but you can do it. But you could trade one ME or one MES or one ES even, literally all day long. And assuming that you don't hit the liquidation, which we'll talk about later, you can trade that contract all day long. So it's a really big advantage of using that leverage, it appropriately, of course. So, when you're using leverage, it's always something that you got to be careful on. It can be dangerous, but it can also be, like in this situation on futures, it can be very helpful to those smaller accounts. I actually think futures, even though people think futures is a little scary, I actually think futures is far more beneficial to smaller accounts than I do people with options. So account size, we're going to talk about that. So depending on your account size, broker, size of positions, frequency of trading, and interest band, there is advantage to trading futures versus options when it comes to your commission fees. So let's talk a little bit about commission fees here. And I'm going to put up this written aspect that I'm kind of reading off of here and talking about. I'm going to put that up in the Discord too later. But for now, I'm just going to kind of read off here so you guys can follow by. So again, I'm going to use TOS and Tradovate for my example here because that's what I know and that's what I'm familiar with. And I can give you real live examples of. So let's take a standard $2,000 option play trading SPYX, the Qs, and NQ futures. So if you were to enter, your whole contract or your whole option entry is $2,000 in value. So on a 0-1 DTE, you can take about 3 contracts of SPYX. So to get in and out of that play, you're looking at about $2.76 in total. So about $5.52 in total round trip commission. Now, if you flip over to Qs, just to get to that $2,000 amount. And now remember on Qs, you don't really have what you have. We have NDX, but it's not traded as well as SPYX. So you really can't size up on the Qs and the NASDAQ like you can on SPY and SPYX. So on the Qs, you're looking at almost $20 round trip just to get into a position. Now to take one NQ future, you're only looking at about $5.58. So now when you compare SPYX to NQ, your commission's about the same there, but it's a huge difference when it comes to trading from Qs to just NQ. So, that's almost, 1/4 the cost to get into the same position size, relatively speaking. So, you might be thinking, oh, well, that's only 15 bucks. I don't really care. But, if you have a small account, that 15, 20 bucks, that really adds up. So, I mean, just to enter, one full size, if your account value is only $2,000, and let's just say you full port it every time, that's 1% of your account just in fees, just to enter a Q's position. Versus on NQ, you're only looking at about $100, to $100, or sorry, $5 there. So, if you add it up throughout the day, so let's say you're a scalper, this is where it really starts to add up. And even on futures, trust me, it can add up too. But especially, looking at day trading some options and things like that, something like the Qs, or even if you're one of the ones that just day trade SPY instead of SPY-X, if you're looking at day trading 20 to 30 times of the Qs, you could be looking at $400 to $600 just in one day in commission. Versus if you were doing the same thing on NQ, you'd only be looking at about 100 to 150 bucks in commission there. So definitely something to keep in mind there. Another big thing to keep in mind with futures, and a big benefit of it, is there is no premium that goes into the futures market upon entry. So, you basically enter and it is a defined, realized loss or realized gain. So essentially, you enter at, let's just say, I'm going to use ES because it's easier numbers. Let's just say you enter at 4,500. If it goes up 5 points, that's 250 bucks. If it goes down 5 points, you lost 250 bucks. It is just purity of that there. Another kind of advantage that I'm putting here for futures is swing trading. So swing trading by nature is fairly risky. And a lot of times I definitely do not recommend people to swing trade, but it is something you can do. But with, options, if you're swing trading outside of very few brokers, you are locked in to your trade throughout the night. So, like this night, recently we've had a lot of movement overnight. So you might be looking for puts overnight, and you might be looking for a certain price target, but if that price target hits overnight and then it bounces and all of a sudden it opens green, you lost on that play, even though it perfectly hit your price target. With futures, you can hold overnight, and if you have a price target, you can set your sell right there, and if it hits, and then you're good to go. And you can also set, more importantly, stop losses to really limit your downside. A lot of times with options, you're pretty much looking at, a hit or a not hit. And not only that, with options, you have overnight decay and IV movement, all that stuff. It can really, really mess with some overnight swings here. So, all right, so we're going to go on to the next slide here. So some of the cons of trading here on futures. I would say one of the biggest cons of futures is people over leveraging. Now, again, this is not a con in and of itself of futures. What it is that just a lack of, I would say, risk management. So with futures, yes, you can enter one contract on ES with about 500 bucks in your account. Now, again, if you enter and then it drops immediately, you're going to get auto liquidated. But what people have a problem with doing is that, like, oh, well, I have 2,000. I could take 3 contracts and I'm hoping it's going to move really fast and I'm going to get a big hit. But what they do is they're over leveraging incredibly too much, and then it makes one small move against them and completely auto liquidates them. Which means the broker closes you out. So we'll get to that later, but the brokers essentially have a set amount of movement that if it hits that below that level of balance in your account, then it just automatically closes your position. So that's a big issue there. The other one, and this is really with ES more than I would say NQ, but it can affect NQ also, but especially trading ES, which ES again is SPY. Lack of movement can really hurt on futures. So, there are times where you might see a big move on options, because if you remember how options are priced by the MM, so, they calculate the IV, the expected movement of the day, all that jazz. And so, if you have a day where, let's say market's only expecting a $2 movement of day, and we get like a $3 or $4 move day, kind of like today where we had a much lower expected move than what we got, those options are going to pay really good. But on, with futures, it might look on options that were moving really good, but on futures, if you aren't getting a lot of movement, especially on ES, then you're not going to really get a big payday. And that's really, it's going to really hurt. That has hurt me before in ES. And that is one big reason I switched over to NQ. On ES, a lot of the times the move happens and you can watch that the move played out from a price action standpoint, but it just never moved enough to give you a reward that made it worth your time, basically. Okay, so we're going to talk about some of the main differences between options and futures. So one of the biggest thing that you need to understand is max loss. So on options, you have a defined, if you are buying to open, you have a defined max loss. So if you buy an option, a call, and it's $1,000 to buy that call, that is your max loss. Whether you win or lose does not matter. You will never lose more than $1,000. Now on futures, that is not always the case. If you don't set proper stop losses, or if your stop losses get jumped over, which we can talk about that briefly, but that does happen sometimes in extreme volatility, then your max loss is undefined. With futures, and basically until you get auto liquidated or you close the position out, there is no max gain or max loss. So let's talk about this for kind of an example here. So if, let's say you take a short at 4,500 expecting a big drop in the end of day. If, and this is going to be an extreme example here for you guys, if ES SPY randomly drops 100 points, that is your max loss. If you did not set a stop loss, you will get hit with a 100-point loss. And that's a big loss. I mean, that's 5K right there. So, that is kind of how you have to be careful with futures. And a lot of people, when I was looking to change over to futures, one of the biggest reasons I didn't want to do it is everybody always talked about how scary it was. You can lose so much money so fast. Yes and no, I would say. In reality, you're not losing money any faster than you are on options. If anything, I feel like you lose it slower. Because, with options, you get, like I said, you have all the Greeks, all that stuff. But yes, if, you are, I would say, not smart about how you trade and you let, your contract drop or, drop without a stop loss, then yeah, of course you're going to get stopped out and you're going to have a big loss and things like that. But for the most part with futures, if you are using proper risk management and setting proper stop losses, which we will talk about later, there's no reason that you should be taking huge losses on futures. You should be taking much smaller losses on futures unless you are way over leveraged. There are some tax benefits to trading futures, much like when you trade SPY-X versus trading regular SPY. Let's see, contract expiration. So this is something that you need to keep in mind. So yes, options have an expiration, but it is different than that in of a futures contract expiration. So on options, if you are going to have your contract, let's say a 0 DTE, it expired today, 12/1. If your contract expires at market close on 12/1, your contract could still have value. So if you're in the money, you're going to have value. Now, obviously, it's not very smart to hold to expiration because you can get a really terrible spread and stuff, but you will still have value in your contract. This is something on futures that is way different. Once that contract expires, it goes to zero. It no longer has a value. So you need to keep that in mind. Now, futures contracts only expire every quarter. Usually right around that time of quarterly option, right before quarterly options expiration, you'll start seeing people talk about contracts rolling. Most people roll, if you're holding long term, and then they roll what they're day trading about a week or two in advance. So as long as you aren't somebody that plans to hold a contract for a super long time, then really it's not a big deal, but it's just something that you need to keep in mind here. All right, so how to start trading futures. So I would say getting started, there's quite a bit. We're going to go through the whole process here of basically setting up your account, setting up how to basically equivalent from going from options to futures, and just kind of go through the whole basically process of how it works here. Give me one second. Okay, so we're going to talk about transitioning from options to futures. We're going to talk about account balance and margin requirements. We're going to talk about price movement, market hours, and setting stop losses. So we're going to go through all of those things right here. So, transitioning from options to futures. In my opinion, much like with options, anyone who is 100% new to futures, and I would not even say just to futures, but to trading in general, I always recommend you start with paper trading. Now, again, paper trading has like this, I don't know, nasty, like, I don't know, taste in its mouth that it gives people if they hear you're a paper trader. You know, if you're starting out, people say, oh, you should be using your own money. You know, yeah, you should eventually, but there are so many advantages to using paper trading. You know, if you're going to be going from options to futures, I started paper trading on it because I learned a whole new broker. So I'd only use Thinkorswim. The biggest issue on Thinkorswim is that the margin requirement is full margin requirement. So on stuff like Tradeovate, NinjaTrader, there's a bunch of other, I think even IBKR, you know, they hold a much lower margin requirement, which is nice because you don't have to have as much money in your account. So, but so some of the advantages of paper trading is, you know, you not only get to know the interface of the new broker, because you got to learn a whole new, not only broker, but style of trading, but you get to understand how futures move. You know, this is where I highly recommend you use a broker, you know, such as Tradeovate. Again, I'm not affiliated. They just have a nice interface that I know. It, you know, basically has live data and movement of futures. So you can almost trade like it's real life happening in front of you and like it was your actual broker account. So, you know, basically, the way I recommend transitioning from options to futures is you start with paper trading, learn the interface, learn how futures move, learn how to set stop losses, how to close a position early, how to, you know, enter a second position if you want to, how to cancel a position. You know, there's a lot of different things to learn there. And then once you master that, I really recommend moving on to a prop firm. And this is why. So, you know, again, a lot of people have nasty feelings about prop firms. They think they're scams. They think that they don't work, that they think they're just there to take your money. I would say there are some prop firms, like the smaller ones, I'm not going to name names because I don't know names, but you know, there are some that they are just designed to basically take your money. That's all they want to do is take your money. But there are a lot of prop firms, and like TopStep, I think is probably, of the ones I've used TopStep and Apex. And I'm going to do a long detailed write-up on how to use Apex and how to use TopStep. I'm hoping to have it done by this weekend, so sometime next week I can do that. But they are not necessarily there just to take your money. Yes, from a business model, they have a killer business model that will make them money for a very long time. Because, I mean, you think about it, you're advertising to people, here, pay me $50, and you can trade with a real live 50K account. But, you know, they blow it up and then they keep doing it again, again, and again. I mean, there's people I've heard that, you know, have had like 600 prop accounts, which is insane. But if you really stop and think about it, that's only 30K. I mean, yes, that's a lot of money. Don't get me wrong. But, you know, would you rather, you know, if you're doing it the right way, you can lose a small amount of money to these prop firms as you are learning how to trade instead of just losing all your money. And then when you finally learn how to trade, you don't ever have money left. So, you know, this is kind of the way I think about it, is that instead of risking, you know, $2,500 to $5,000 to start learning to trade futures and blowing up in the process, because nobody really starts trading and then immediately takes it up, you know, starts winning and they never see a red day. So it's smarter to lose $50 here, $50 there, and then you get to a spot where you can get paid back out from those prop firms. And then after you have mastered prop firm trading, it's time to go to real money. So I would highly recommend that, again, you start with micros, not minis here. So the smaller size ones. The reason for that is that going from paper trading to prop firms, there's a certain emotional attachment to those prop firms that you're failing when you actually fail. And when you're winning, you're winning. And it feels kind of more real than just paper where you're like, oh, it's strictly fake. There's no end goal to paper trading. To a prop firm, there's an end goal. So now when you switch over to your actual capital, you're probably going to have, if you are somebody that doesn't have strong risk management, or you're just an emotional person, you're going to have a bit more of an attachment to your, money. So I recommend start at size down, start small and then just build your way up. So don't be, in a hurry to jump into it. And then once you start with, say, like 1 micro, and you're doing really good, go to 5 micros and then go to 1, mini. And then from there, as you're more profitable and doing good, you start sizing up in contracts. That's the one nice thing about futures is there's a really nice slow progression in sizing up. All right, so let's talk about account balance and margin requirements. And again, I'm going to mostly reference Tradeovate because that's just what I know. So we'll talk about that there. Again, I'm not affiliated with Tradeovate or NinjaTrader. So in general, to trade 1 ES or NQ, I would recommend a minimum, absolute minimum of $2,500 in your account. However, I highly suggest at least $5,000 in your account. So yes, you can do it with $2,500, but you have to have impeccable risk management, and you have to be on a really good strategy that is going to continue to build up. There's not much room for drawdown in that account. So for instance, if you were using, let's say, a 10-point stop loss, so that's $500 on a 10-point stop loss on 1 ES contract, if you have a $2,500 balance, you take 4 losses in a row and you're liquidated. So that's something you got to keep in mind there. Now, in general, to trade 1 MES or MNQ, I recommend at least $250, but minimally $500. So same thing here. A 10-point loss on MES is negative $50. So you take 4 of those in a row and you get liquidated. So let's talk about margin requirements here. So something you need to know is there's intraday margin requirements, and then there's full margin requirements, which is once we're outside of intraday market hours, so outside of SPY and Q's market hours. So on ES, the minimum, and again, this is to not get liquidated. This is not to start trading, but this is a minimum of balance you have to have in your account to not get liquidated. So for ES, it's a minimum of $500. MES, minimum of $50. NQ is a minimum of $1,000. MNQ is a minimum of $100. For overnight margin requirements, ES is a minimum of about $13,000. This varies kind of day to day and broker to broker. MES is a minimum of $1,300. NQ is a minimum of $19,000. And MNQ is a minimum of about, again, $1,900. Again, those are a little bit of movement here and there on them. So let's talk about price movement. Let's talk about how we make some money. So on ES, MES, it trades in ticks and points. So 4 ticks is 1 point. So most of the time you're going to hear people talk about a point because ticks are small and it's hard to count a bunch of ticks in a row. So you'll say, oh, I'm looking for 4 points here. Oh, I got 4 points there. So what does that even mean? So on ES, as you can see here, on 1 ES contract, 1 tick is $12.50. So that means you buy at 4,500 and it goes up 1 tick, so that's that 0.25. You just made $12.50. Now it goes up 1 point and you made $50. So let's say you buy at 4,500 and it goes to 4,501. You made 1 point or $50. Now on NQ, it is $5 per tick or $20 per point. So you go up one tick, you get $5. So let's say you buy at 16,000 and it goes to 16,001, you just made $20 or 1 point. Something to keep in mind here is yes, oh, well, NQ makes less money per point. In general, I would say that NQ moves about 3 to 4, if not 5 points per 1 point of ES. So it is much, much faster than ES. So that is something you got to keep in mind too. Because remember, your stop losses, you have to have your stuff set in a way to not get stopped out just by the movement. NMM or NQ can have a bit of movement before you get stopped out. So keep that in mind. All right, let's talk about market hours. We talked about it briefly earlier, but we'll actually hard talk about it here now. So the futures market trades from 6 p.m. Eastern time on Sunday night till 5 p.m. Eastern time on Friday night. Now, every night from 5 p.m. till 6 p.m., the futures market is closed. So sometimes you will see that SPY will move, and then once ES opens, there will be a little bit of a gap. So that's something that does happen sometimes, but just, it's just part of the way it works here. Now, a big difference here is that obviously we open on Sunday night. Obviously, we trade all night, but on holidays, most of the time, the futures market is open till about 1 p.m. On the holidays. And then it'll reopen that night at its normal 6 o'clock time. All right, so we're going to talk about setting stop losses. One big thing here I want to talk about is how to convert that over. So basically going from trading option stop losses to trading on futures. So this is going to be a little bit of in depth here. So we'll kind of talk about it here. So setting a stop loss is dependent on the person and the account size, but here are a few examples of how I started using stop losses when I first transitioned. So when I first started trading futures, I essentially took one ES contract, and what I wanted to do was figure out what my previous dollar amount was for a stop loss and convert that to an ES contract. So this is where people are probably going to disagree with me, and that's just how I did it, and that's fine. But so what I did is I had a $2,500 position. In general, I used, because I was scalping, a 10% stop loss. So that's $250. So what I did is I took $250 and I divided it by 1 point, which is $50, and that gave me 5 points. So essentially, when I started trading futures, my goal was 10 points of profit and a 5-point stop loss. So, that worked well for me for a while, but then what I realized was that I could obviously, improve that, but we'll talk about that in a little bit here. So, the best way to use a stop loss on futures is, in my opinion, is to size your contracts in a way that you can enter and at a critical support or resistance, and then use that as your stop loss. So if you follow me in the Discord, you'll see frequently that, let's say we put in, and I'll just use ES because it's easier numbers. Let's say we put in a new demand at 4,500 and we have a double bottom. It looks like we're about to break out. So I'll look for a little bit of a back test in the 5-minute candle. And once I see we're getting close to that level, and I can set a stop loss that is just below the previous demand. So let's say we're at, 45.04 and my stop loss is 5 points. So that gets me to 44.99. I'll enter there because I'm like, okay, if it loses that demand again, it's a failed breakout. If it backtests it, it shouldn't go below it and still push forward. So that's kind of the best way really to go about it. So yes, you should always just enter with a stop loss, but the best way to do it, and this is what I do, is I have on my NQ plays, I use about a 15-point stop loss by standard means. But once I enter that play, I will almost always move that stop loss up to wherever the closest previous candle support is. Usually that wick, if I can move my stop loss closer to that candle and still be just under that wick, that's where I'll go. And that's kind of the best way to do it there. So understanding different types of stop losses here. So this is a big thing. Again, I'm going to talk about Tradeovate because that's just what I know here. On futures, instead of calling them OCO orders or one cancel other orders, we call them brackets. So a bracket is essentially the ability at the time of entry to set a take profit and stop loss. So you will definitely want to familiarize yourself with these during your paper trading and your prop firm trading. One thing that, and maybe someone can correct me if I'm wrong, I have never in futures been able to find a way once you enter a play to then set a trail or any sort of complex stop loss. You can set, so let's say you enter, you just enter at 4,500, you don't have a stop loss and you don't have a take profit. You can put in a manual sell order at whatever price you're looking for and leave that on the books. And then if it hits that level, it will sell there. However, one thing you have to be careful of, if you're not somebody that uses the exit and cancel all button, you can get in a position, and this has happened to me before, and I know other traders too, where these orders get left on the books and then you don't realize it's there, and all of a sudden the market moves up crazily and it hits your sell order that you had for a buy order, and then you're in a short and now price is moving up and you're starting to take a loss. So you got to be careful about that. All right, so on, let's see. So on Tradeovate, one kind of annoying thing, and we'll talk about it a little bit later too, but you have to set everything in ticks, not points. So remember, 4 ticks is 1 point. So keep that in mind. So let's see, for example here, let's say you wanted a 10-point stop loss. That's actually 40 ticks. So when you're putting that in, you have to remember that, because I remember when I first started doing futures, I accidentally was putting in points instead of ticks, and that was definitely a big deal. Yeah, Roth, that is definitely, unfortunately, something that can happen, and it's never a good time. So you got to be careful about leaving those orders on the books. Always, whenever you exit a position, always check that, make sure everything got taken off. Whenever you do your brackets, it should automatically cancel the other orders. I've never had it not cancel the other order, but it can happen. So again, just going back to risk management, never ever enter a position without a stop loss and a take profit. Even if you have a huge stop loss, at least enter with something. So let's talk about some of these levels here. So you have a stop limit and a trail stop limit. I do not recommend using these, and I have never used these, and I probably never will use these in my trading. The biggest reason is, and this happens in options too. If you are an options trader, you know all about limit orders and how they can be a little tricky. If you have a limit order, if you get a huge market reaction, and I know French is in here and he's had this happen, that limit order can get skipped over. So let's take, for example, CPI day, and this is in a real life example here. If there is super volatility, like let's say you jump 20, 30, 40 points in like 1 second, just like that, it will skip over limit orders. It will not fill that order. The way the broker sees it is that you would rather get filled at that level than actually get filled above it. So I do not recommend ever using limit orders. You should only use market orders, and that's just kind of how I go for futures here. Another big thing too on futures, unlike options, the spreads are so tight. I mean, the spread is always 1 tick. I don't think I've ever, and I've been trading futures, I think I started in September maybe end of August, I can't remember honestly, but I have never one time seen the spread, even after hours, anything but 1 tick. So you almost are always going to, on a market order, get filled exactly where you have your market order. I think a handful of times that I've been trading futures now, have I ever got filled like more than 1 tick off. You know, again, not a big deal. It's $5 here and there. All right, so for a stop order, it's just like options. It's a hard set market sell. So meaning if you enter at 4,500 and our stop loss is at 5 points, then we have an auto 44.95 stop loss set. Just like options, if that price level hits, you are instantly closed out of that position. Again, I would highly recommend always having a stop loss set, even if you're trying to play a much, much bigger breakout. If you catch a weird news, J-Pow speaking, something like that, you want to have some sort of protection. Another really cool feature that I love about futures is the auto trail. So these are trails that can be are a little complicated at times to set, but essentially it kind of works like an options a trail. So once you're up 5%, you set a 5%, it sets you a 0% trail. You go up 10%, now you have a 5% trail. It works just like that. So we will talk about this later when we get down there, but you have to set 3 different things to make this work correctly. You have to set your stop loss. This is the actual trailing stop amount you want. So if you wanted a 5-point trail, then you have to set it at 5 points. So that means once it hits 5 points, or once your trigger is hit, it trails by 5 points. Then you have to set your profit trigger. This is where the trail triggers. So essentially, once you are in this many points in profit, it sets this trail or this trigger. It triggers your trail to lock in profits for you, basically. So this is where you can set this independent of your stop loss. So this is what I do. I have, let's say, a 5-point trigger of a 2.5 point trail. So once I enter my 4,500 or 4,500 position and I hit 4,505, my trail is at 4,502.5. The next one you have to set is the frequency. This is where things are slightly different, but are also kind of confusing in my opinion here for futures. But essentially, set this the same as your stop loss. So basically, frequency is how often it's going to be re-triggered. So think of it as profit trigger is the first time it triggers. The stop loss is how much it actually moves by. And then frequency is how often it re-triggers. Another really cool feature here is auto break even. So I love this feature. Basically what it does is after a certain amount of profits, it'll set an automatic break even. And you can even set what's called an offset, which allows you to have an automatic green position. So let's say you have an auto trail set for you hit 10 points and then my trail starts at 5 points and it trails up every 5 points after that. On the auto break even, you could set it so once I hit 5 points, I have an automatic 1 point break even. So it basically pays for your commissions. And that way, if it goes against you, you at least are breaking even green and you're not losing money on your trade. So you can set your auto break even and your auto trail. So that's a really cool way that if you, like I said, you want to try to let these run more and get some bigger wins, but you want to set some protection. It's really nice that you can do that here. All right, so we're going to talk about how to properly size from options to futures. Now, this is how I did it initially, and then I adjusted. So again, this is going to come down to how you want to do this. So the way I always think about trading is I think about it in a dollar value. So when I was trading options, I had, a $250 max loss on every play. Now, some people will say, well, you have a $2,500 position size. That's what you're risking. That's your risk. I disagree with that. If you are always setting a stop loss on every single play you take, and that stop loss is always 10%, yes, you might be technically risking a premium of $2,500, but if you have a stop loss of 10% and it's a market stop loss, you will never lose more than 10%. So you are only risking $250. So when I switched over to trading futures, I wanted to basically equivalent it out to the same on a stop loss. So let's figure out how to set your let's talk about how to set that stop loss for you here. So we're going to talk about a couple different things here. So let's say you traded with a $5,000 position size in options with a 20% stop loss and a 40% take profit. So basically, you know, 5,000 times 20% is 1,000. So that's your max loss per position. So divide that by 50 points, or sorry, 1 point for 50 bucks. That gets you 20 points. So to figure out basically how many max, and this again, this is where I'm different. I'm looking at a dollar value. I'm not looking at the whole risk there. So technically, if you switched over to futures, you could trade 4 contracts for the exact same max loss with the same stop loss. So, you know, and it's the same thing for take profits. So again, you have to decide, are you looking at risk side or are you looking at the similar dollar value? And again, that's where I'm very different. You know, a lot of people question me when I switched over. They're like, well, why are you starting with one ES? You should be starting with one MES. And yeah, you know, I could have started with an MES, but for me, again, losing, you know, $250 on a trade is the same thing I was doing on an option. So there was nothing different. And, you know, people are like, oh, but you lost $500 that day because you lost. I'm like, yeah, but I lost the same on options too. It's the same dollar value risk. So that's how I look at it. Now, with that being said, obviously, when you do transition over to futures, obviously I recommend paper trading, prop firms, and then real money. I do recommend you start small. Start with 1 contract and then size yourself up from there. So kind of look at my stuff here real quick here. All right, so we're gonna go ahead and talk about how to set some of this stuff up here on Tradeovate. So this is a screenshot from my practice account in my prop firm for Top Step. So I use Tradeovate. Again, Tradeovate is just what I use. I just use Top Step. I'm not recommending it or anything like that. It's just what I'm going to talk about here. So a couple things I want to talk about first is how to set up your order window and set up like your actual desktop. So you can trade mobile. The mobile is a really nice interface. I prefer desktop, obviously, because I trade from my desk. But one big thing here is this little plus sign up here is a huge thing that I had no idea what it was and how to change any of my stuff here. So all these windows, so you see order ticket right here, performance center, orders, positions, and then this is, I think it's just called charts. All of this can be moved. So if you click, and I can't do it because obviously this is a screenshot, but if you click this plus here, it opens up a little drop down right here and you can choose, and there's tons of other options. I just keep mine pretty simple. But there's tons of other options that will, display here for you to set your stuff up. For me, honestly, I don't need order ticket, but for a pleasing to my eyes, I have it on there still. I love having orders on here, mostly because I obviously have to push my, positions out to you guys. If it wasn't for that, I probably wouldn't even have that on there because it wouldn't matter. But what I have on here is basically action shows buy and sell. It tells you what you're in, whether you're, NQ, ES, the order, and all that stuff right there. So then it tells you your fill, order status. This is a big one right here. So if you have stop losses and take profits set, when you have your order set, it'll show, let's say a buy, NQ, whatever at 16,000. Then it'll have your, it'll have 2 cells right here and it'll show working. And those working orders are your stop loss and your take profit. So this green circle we'll talk about for the next screen. We're going to go on to that and talk about that here next. But I found this out today and I had no idea this was even a thing until someone else told me about it. So John, thank you. This little white caret right here, if you click this, it drops down this menu that's on the right side here. Now on Top Step, doesn't really matter because you have a daily loss limit, and Top Step is really great. It actually shows you exactly what your loss limit is. But for Apex, if you're trying to figure out what your live trailing drawdown is, you can click on this, and if you go to this trailing max drawdown, this little number pops up right here. You have to hover over this dollar sign right here. But that pops up and it shows you exactly what in the moment live your trail is. So, remember, I'm going to do another thing about this later, but on Apex, you have a max trailing drawdown. So essentially, from the high of profit to the low, you can't draw down more than whatever they say you're allowed to do. 3,000 for a 50K account. So that's always important to measure. Now, the Apex interface, I feel like kind of sucks, honestly, because it doesn't really the Top Step interface is just very user-friendly. It gives you all the information, breaks down your trades, a bunch of cool stuff. Apex is not as friendly, so it's hard to know where you're actually at. So this is a huge feature to watch for sure. Talking about next thing, big thing here. So this is all these little gear wrenches here. They all do different things. So if you click on these gear wrenches, you can, change the way things look. Like this one right here, you can change the order. You can change what's in there. Same thing here. You can change all that stuff. So if you click this gear right here, it will take you and it'll open up these menus. So this is how we actually set our trails and things like that. So again, you can see here it says shown in ticks. So that's where you can see what you're setting. So you have basically, you go to at the monies. So they're called brackets, but they also call them ATMs. So you click on. You can name it if you don't have any other ones and you only use one, then it doesn't even name it and that's fine. But over here, as you see, if you want to name it, you do click that plus sign and it opens up a new one and you can set the name and what you want it to be. And then where this orange drop down right here is, you click that and then you can change to different ones. So like if you have like a one for swings overnight, you have one for scalping, you have one for like longer intraday plays or whatever. So go to your type, you can click stop loss only, you can click take profit only, or you can click take profit and stop loss. So obviously I do take profit and stop loss. So then you can go ahead and set your take profit here. So this is for my NQ here. So, you have your points here. So that's 15 points of a stop loss. And then you have 10 points here, or sorry, take profit. And then you have 10 points for your stop loss. And then you go to your stop loss type. So that's what I was talking about before with the, auto break even, the auto trail, all those things. You can set an auto trail and an auto break even. I just set an auto trail for mine. I don't usually not in a play long enough, or I don't want to be stopped out that quick. I want to let it run a little bit. So I set my stop loss. So essentially my frequency and my stop here is at 20 ticks. So 10 points. And then you have the other one here. 5 points. And then you have the other one here, 40 ticks for the profit trigger. So when it actually triggers. So that's kind of how you go about setting them. I know a lot of people had questions about that, how to properly set up the Tradeovate brackets. On mobile, and I don't have a screenshot on here, you can do it on mobile. It's on the left side. If you open up there's like a little drop down and it'll show like have brackets on, and then you can adjust it on there. You cannot do trails on there. You can basically only set take profits and stop loss. There is some sort of new trail they have on there. It's called like a profit trail. I don't really understand it. I don't know how that works, so I've never used it. But it is on there. It is something you can use. So, but yeah, guys, I hope you enjoyed this. I hope this is helpful. Kind of transitioning over to futures. I'm going to push out for you guys tonight this introduction of futures. You can kind of read through on your own time and see. I didn't talk about everything I had in there, but kind of really nicely lays out what futures is, how to trade, how to transition, how to set your account up. And of course, if you guys have any other questions or anything, go ahead and just send me a message, post it in one of